Because for a while, we've really attributed some of the weakness with Target to that exact fact of the overall just higher income consumer shifting now and utilizing Walmart in their relatively lower prices. And so is this going to be a lasting trend where we think that we've seen like loyalty now start to build with some of these consumers that say we're not Walmart regular several years ago?
Yeah, actually, if we just blow out slightly and say, okay, what does this mean for consumers? I think that it'll come back into that point quite well. Fundamentally, what these earnings tell me, aside from the company itself, if I'm looking at the consumer, is that consumers broadly, working Americans, are simply being a lot more value focused across many different income demographics. We saw the retail sales numbers come out last week, a negative 0.6%. What was the major contributing factor for that? It was auto sales. We saw Home Depot and Lowe's print. What was the major contributing factor there that we learned? Well, Americans aren't going to basically go out and finance big purchases right now. They're not going to look at the $30,000 home renovation. They're more likely instead to maybe, I'll say, paint the cabinets instead of doing that full renovation. Especially on these larger purchases, consumers are a lot more sensitive. And so what Walmart's earnings actually tell me, I think it sort of puts an exclamation point on this overall story. Again, that being, consumers across income demographics are simply being more nuanced with how they're spending their money, especially when it comes to finance purchases, and secondly, on discretionary spending type of purchases as well.
Okay, so if we take that into account, we take general price levels that seem to be increasing at a rate that's a little bit above maybe, let's say, what the Fed would like to see, a cooling labor market, and a market that doesn't necessarily jive with any of that. It's just off its highs. I know we're waking up a little bit here today, but when you look at the overall markets here in the U.S. and then you take into account all the things that are supposed to drive those markets, do you think those are in alignment right now?
Alex, I think that the whole theme of this conversation so far is nuance. And in some ways, if you just took the broad market narrative this year and say, hey, earnings across the board, across America's companies are up, we see markets up, that narrative jives, I think, very well. They are in alignment. But I think that to Jenny's last question and to the broader point here, there is an affordability narrative that is raging right now. And I actually think that that's going to continue to rage on. We talk so much about, interest rates and credit rates have been top of mind, especially the last couple of weeks here. That is not going to go away until we see energy prices come down, and I think that that's the most direct relief you're going to get for consumers on some of the discussion points that we're talking about today. Can they get relief to make some of those bigger purchases or not? It does come down to credit, and I think right now, again, most correlated to what energy prices look like.
Okay, and so as far as assessing, just the overall retail environment right now, as far as the reports you've gotten this week, Walmart, Home Depot, Lowe's, Target, and of course last week's retail sales report, as far as expectations now and into the back half of this year, are we going to just see more of the same, or do you see anything necessarily just completely sort of derailing this relatively strong consumer environment?
Yeah, I think that it's interesting that you used relatively strong there. I think that so many of the headlines right now are telling us the consumers on the green mile, they're totally gone, they're tapped out. I think that the narrative that I see is actually we have a pretty durable consumer, a lot more durable, I think, than we want to give them credit for. Yes, of course, Americans aren't happy with, the amount that they have to pay at the pump for gasoline. They don't want inflation. We see that in the consumer sentiment and confidence numbers reflected, Jenny. But what I believe about the second half of this year is that, I think that there will continue to be this affordability narrative, especially because of the election season we have. But I'm actually really constructive about the second half of this year. We have seen incredible profits across the United States companies throughout this year. I do think that we could still see a little bit of pullback in volatility, again, because of election season. But I see fundamentally, I think, a constructive and more bullish path as we round the end on the second half here of 2026.
Okay, I like that. Some optimism on this Thursday. Yeah. We needed that. So really appreciate it. Ted Thatcher, president of Bright Lake Wealth Management.